All right, guys. Sorry, not Merry Christmas. I don't want to leave people out. Happy holidays, everyone. It is a fantastic week so far, at least, especially from last Wednesday. Last Wednesday, I thought the world was going to fall apart, and here we are today. The world is not falling apart. In fact, the market is just like 50 basis points away from all-time highs, which is pretty awesome. Now that we are here today, apologize for being late, sir. Had a little bit of technical difficulties on actually, I don't even think it was on my end. I think it was on the studio's end. But anyways, I digress. Here we are today on December 22nd. It is, again, a wild week in the market. It's a short week, actually. We do have the market closed on Thursday, I believe, for the federal holidays. Merry Christmas. And I believe is it a half day on Wednesday? I wonder if it's a half day on Wednesday. Anyways, 3 hours, 4 hours, 6.5 hours, doesn't matter. There's a lot of degeneracy to go around regardless. Let's take a look at the bulletin for today. So we have Tesla sitting here around new all-time highs. And I really think that's on the back of the fact that Waymo's basically went out of service and paused on the streets across the board in San Francisco. Personally, I've never been to Waymo. I'm not sure if I want to go to Waymo, especially after that incident. But either way, I don't know if I go to Robotaxi either. Just something about no one being in the driver's seat just makes me a little bit weary right now, especially since seeing all those crazy videos online. But Tesla's sitting here at all-time highs. I don't think it's because of the Waymo issue, but we'll get a little bit more into that one. We have space stocks basically just ripping today. Actually, they've been ripping since last Friday. RKLB, I don't know if it hit the 80s or not, but it is really up there. Also, Redwire, RDW, ASTS or AST Space Mobile, SIDU, SIDU, a space stock that I didn't even heard about, is up ridiculously a lot today. And next, we have NVIDIA starting to plan to ship chips to China. Also, we had some news from Alibaba, reportedly that they're looking to buy AMD chips. And finally, we're going to touch on why data center stocks are up a lot. Maybe it has something to do with the fact that the market is like 2-3% off from its lows, but I think a lot of it has to do with the fact that the data center theme is now back in the studio. We have Google acquiring Intersect, which is a data center energy company, for $4.75 billion. We'll look a little bit more into that one as well. Welcome to the show, everyone. I had a birthday waiting. I don't know what that means, but happy birthday. What's going on, Mosh Stocks? June, nice to see you. It is a half day. Oh, it is a half day on Wednesday. Okay, that's not fun. Well, we can always get a lot of zero TTE calls on that day, so it's all good, all good. Welcome, Jorge, Venom. Good to see you. Oh, again, Jude. So to start things off, I actually have a great announcement to make that I'm probably going to wait until the end of the stream to do. But let's go ahead and kick it off on the first piece of news today with the Waymos. Maybe some people never heard about it. I actually just saw it in a tweet yesterday. I don't know when this outage actually happened. But we had a slight incident with the Waymos in San Francisco. I don't live in San Francisco. I live in Los Angeles, so I did not experience the issue myself. But there was a pretty big issue with the Waymos in San Francisco. So I'm going to go ahead and play this clip from CNBC, and let's see what's happening here.
Waymo service is back up in San Francisco after a weekend blackout exposed what might be a blind spot for the rapidly expanding robotaxi company. Our Deirdre Bosa tells us why in today's Tech Check. Yikes, how was it, Dee?
It was interesting. Let me just show you some of the scenes from Saturday night here in San Francisco. You had Waymos stopped in the middle of intersections, causing gridlock across parts of the city. Now, the vehicles are designed to handle dead traffic lights and keep driving even if they lose wireless connectivity. But what you're seeing here is a system that defaulted to extreme caution when too many variables broke at once. Now, this raises a bigger question for the Alphabet subsidiary. Can they generalize? Because the ability to adapt in real time, that's what ultimately unlocks scale. And it may be the key divide between the Waymo and Tesla approaches. Now, Elon Musk posted over the weekend that Tesla robotaxis were unaffected by the power outage. Now, that is not a fair comparison because Tesla does not run a driverless service here in San Francisco, but it does reveal a different underlying philosophy. Tesla is trying to build autonomy that behaves more like a human, so one that can improvise, which can infer amid ambiguity, like an like in a blackout. Now, here's a simple way to think about it. A Waymo robotaxi approaching a dead traffic light treats it as a four-way stop, then proceeds very cautiously until it can confirm what every other actor is doing. So during a citywide blackout, that quickly turns into gridlock. A more human-like system, which Musk says Tesla is building, would do what drivers actually did that night, and that is read eye contact, edge forward, make judgment calls without having perfect signals. Now,
okay, we see the chat getting a little bit crazy with the word thrust. Thrust is the word of the day. I think that's what Ahmed said, right? Thrust. It's actually pretty interesting. I've been hearing the word thrust a lot lately. But I guess the word of the day is thrust. So we will try our best to include the word of the day so we remember the word of the day. I know Ahmed has a lot of those word of the day things, but thrust will be the word of the day. And yes, thrust is the word of the day. Let me continue the video for you guys.
May come with safety trade-offs because it is asking the system to make judgment calls with less certainty. So learn in the wild. If that works, it could scale faster because it doesn't require perfect mapping before every deployment. Now, Waymo has the momentum right now. It is raising new capital at $100 billion plus valuation, is expanding to new cities. Now, the company says that it focused on rapidly integrating the lessons learned. That's what it's doing going forward. But this incident, guys, it really puts a spotlight on whether scaling, which is what this race is all about, means careful city-by-city expansion or systems that can adapt in real time.
I guess the one question would be, maybe the more adaptable system, the improvisational approach that Tesla is talking about would allow it to scale better if those cities permitted it, right? I mean, is that going to be a barrier to how the authorities decide whether they want those robotaxis on the road?
Right, and that is sort of the trade-off that Tesla is making, right? It's more of an improvisational situation or strategy. So cities are perhaps a little more reluctant to say, okay, go learn in the wild, use our city as a test case. Whereas Waymo has done this very methodically, almost impeccable safety record. And so there's trade-offs. It's going city by city. It's getting more of those regulations. But now it may not matter, right? Because other cities that are looking at what happened here in San Francisco over the weekend may say, we don't want any of that. I mean, we've known historically, too, any little thing happens in San Francisco, big or small, and that has the ability to, shut down robotaxi ambitions right in their tracks. I mean, nobody was hurt. There were no accidents this past weekend. But you look at a case like Cruise, right, which happened, I think it was a few years ago now, actually struck a pedestrian, and that was the end of Cruise's ambitions. So that hasn't happened to Waymo. It's developing in a very different way. But regulators are already sort of on the watch for anything that goes awry. And
all right, I think that's enough of that one. So my thoughts on this scenario, I mean, you're never going to have like perfect deployments of IT. There's always going to be underlying issues, and that's how things actually improve in IT. You once you have the errors or once you have the issues that you don't catch as far as stress testing or unit testing, or in this case, QA, they can fall through the cracks and you can have a production issue. In this case, it was an entire city, which is one of the largest cities in the entire world, and one of the most affluent, where everyone uses Waymos. And yeah, a really unfortunate case. And Elon Musk definitely took advantage of that situation and basically tweeted that saying like, well, the Teslas were the robotaxis were online during this incident. As the host was saying, well, Waymos, it seems like they actively connect to the internet or some internet pedigree for some sort of central unit processors to be able to continue running, right? For the robotaxis, for the Tesla FSDs and everything, I own a Tesla too. Like, you don't need an internet connection in order for it to use FSD, right? It'll run on its own. The entire neural processing network is within the car itself. That if there is an internet outage, then the car will still be able to function. Will still be able to function on full self-driving. But being that, we do have the benefit of the doubt that, look, if the internet goes out, we can still drive the car ourselves. Now, with the Waymos and the robotaxis, there's obviously is no one in the driver's seat. The robotaxi is a different story because I believe they're still running them with someone in there. And it was recently spotted that there was a robotaxi or a cyber cab, whatever they call it, with no one in the car. But that's not exactly the case yet. So does this actually put Tesla ahead? Well, Waymos are in multiple cities around the entire world, and they're scaling pretty far, right? They're in New York, I believe they're going to Atlanta, they're in Dallas, and so on. And a little bit of part of this is, I would say the issue is more on not with the Waymos themselves, because it is a private market in its own valuation, but the issue might spread into Uber, right? So if this issue did happen with Uber, maybe someone will call a different Uber, or maybe someone will be like, I'm not going to use Uber anymore, or something like that, whatever the fallback is. And Waymo might not be as affected by it. But I mean, we'll see. I think the real test would have been, let's say there were robo-taxis that are available in San Francisco at the time, which I don't know. Somebody correct me or not in the audience, but if there were, people were probably like, well, I'm just using robo-taxi, whatever. But like, chances are someone wanted a human driver at the situation like that. If I was in that situation, I would be like, let me just get the human driver at this point so I don't deal with this anymore. So I don't think this really is 100% beneficial for robo-taxis or Teslas. I also don't think it's beneficial for Waymo. I think it puts a little bit less trust in these autonomous taxis for people to kind of fall back on, what if there is an outage again? Or if someone has their phone out and you're in San Francisco and you're about to call one and the Waymos are available, will that kind of stop them from thinking like, maybe I shouldn't use a robo-taxi when it's available, or a Waymo, maybe I should just opt for the human driver, right? So I actually think this actually affects all of the industries, not just Waymo per se. And I think Elon was trying to separate himself from that by basically saying that the Teslas were not malfunctional during this period, whatever. But at the end of the day, it's going to affect the entire robotaxi fleet. And this kind of shows you how much in infancy this technology is. Maybe not as much in infancy as it was like 5 years ago. No, sorry, maybe like a year ago. But today, it just shows you that, hey, this is a very sensitive system we're instilling here, and there are cracks that need to be resolved before it's like a full-scale deployment, and it might make people a little bit hesitant on jumping into that one. So again, like, I'm not an investor in Waymo. I mean, if I was, I wouldn't really care about this stuff, and I'm pretty sure people who are owning Tesla stock don't really care about it. I mean, the stock is, let's take a look at Tesla right now, because that thing is like sitting near all-time highs. Let's see here. Oh, hey, look, it's me right there. All right, so let's take a look at the Tesla stock. We're going to take a look at the other stocks too, because today there's some pretty crazy moves in the stock market. Looks like Tesla receded a little bit from its from the highs of day. The high of day was around $500. It's pulling back from the highs of day. Actually, we have the Qs not really near the highs of day. The Qs actually was a face ripper, but as soon as the market opened, it was like, nope, yeah, over here. So let me do the shorter time frame. Holy cow. Can you guys hear me? I just realized my mic was like on the ground. All right. So let's take a look at the Qs here. Yeah. So at open, I got to be honest, I was not awake when the market opened. My kids are home, so we were just sleeping. And yeah, pre-market, it was as high as $621 in the Qs. And as soon as the market opened, it just basically plunged. And I don't know. You have big money basically like waiting to drop the bag in retail sometimes. And I don't think that's really the case. I think it's just the algos. As soon as the market opens, it does a lot of take profit. I mean, when we closed the market on Friday, the market was like around $617 in the Qs. So it was probably like immediate profit taking with the algos as soon as the market opened. But there was other news that floated around this morning that still keeps the market afloat. We're about 35 basis points on tech. Keep in mind, tech was leading basically Thursday and Friday. So we have a little bit of a broadening out of the market. I thought RSP was up a bit more than it was today. Yeah, it was around, actually our RSP is sitting around the high of days, which is good to see, which means that we're getting a little bit of broadening out in the market. In fact, the SPY is up 65 basis points, which is higher than the Qs. But the one getting the biggest love today is IWN, the small caps, which is great to see because we have other small caps and mid caps that are doing really well today. We saw the NVIDIA news this morning regarding the H200 chips. We'll get back to that one. But a lot of these data center stocks are up a lot today. HUT is up 16% today. This is actually really interesting because HUT did have some crazy news the other week as far as expanding partnership with, I forget the name of that company that Anthropic is working with. And Google is backstopping it. But anyways, HUT was up a lot, and it's actually higher than it was before, and it's up 16% today, which is really good to see. CRWV basically is part of the Genesis project that's getting a lot of funding from the U.S. So CRWV has been seeing some really good green days lately, ever since its lows around $65. That's up actually about 25% from its lows. NBIS is at $33. IREN is back at $40, but still pretty down. So, the question is this a dead cat rally? Is this a dead cat bounce for a lot of these data center stocks, or is this a revival back to new all-time highs for these data center stocks? And I think that's the biggest question here. So again, for everyone who's tuning into here on Twitter or on my YouTube channel, go ahead and tune on to youtube.com/@wolf_financial. That's where I will be streaming the podcast starting in 2026. Yes, we have like 7 or 8 trading days left for the rest of the year. RAP and active investor Warren Buffett. Warren Buffett is very much still alive, but this is his last few trading days of the year before he is no longer going to be running the books for, or running the trading desk for Berkshire Hathaway. But I mean, let's be honest, guys, he's still going to be running the ship. Like, you know, even though Abel is still going to be running the helm, he's going to hit the approval button from Warren Buffett in the meantime. So, you know, he's still going to be around. All right. The GOAT is still going to be around. Now, the trader, the greatest trader of all time, of course, is Nancy Pelosi. But I don't want to get too much into that one. It's a little bit of insider trading. But anyways, market's looking pretty good today lately. I mean, I think the biggest thing we need to be concerned about, not so much the small caps. Small caps are going to move, is that these mega caps need to continue to rally upward, because if these thank you very much. Yes, Fluid Stack. I believe that's the European data center company that's expanding the US. But yeah, so we need these mega caps to continue the direction in the upper momentum, because Apple is like 10% of the S&P 500, right? So Amazon obviously is not, but Amazon is doing 64 basis points today. Google is a pretty big part of the S&P 500. That's up about 1% today. Meta is like faking people out left and right, which I don't understand. Like, I don't understand why this stock, I mean, I guess I do kind of understand like how the market's like, we don't really want Meta. We want to chase Google. We want to chase Tesla and all this stuff because that's what's working. But at the end of the day, I did a post last weekend basically showing that Meta is actually one of the cheapest mega caps right now in the market, and so is Amazon. We could probably get a little bit into that later on this week in a separate episode. Microsoft is red today. Netflix is red today. NVIDIA is up 1% today. We get a little bit into that one. Tesla is up 1.5%. Let's take a look at some space stocks here, actually. So ASTS is up 13%. The all-time high was around $100, so it's not quite there yet, but I would say that this move is pretty fierce, like really fierce when it comes to ASTS. ASTS is about 70% from its $50 lows the other week. Rocket Lab is up, geez, this thing's at an all-time high. Rocket Lab is up 95%. If you brought Rocket Lab 2 weeks ago, November 24, you'd be up 100%. Is that just insane to think about? Nancy Pelosi is probably just chilling over here, but she probably sold her position. But Tempest AI is only up about 3%. We do have a lot of the other space stocks that are out there. We have Redwire, which is up pretty considerably, not exactly 100%, but that's up considerably. SIDU, SIDUS, Space, whatever this thing is called. This thing is on a monster move today. It's up about 100%. And in fact, it was literally just trading at 86 cents. Not too long ago. It's up about 168% from those lows, but almost as much as 200% from its recent lows just Friday morning. So if you bought this stock on Friday morning, you would have basically made a triple bagger right there. So congratulations, was able to take advantage of that dip. Oscar is, see this, I talked about this last Thursday in the stream. You need the positive commentary from the ACA subsidiaries and the government. So that is really going to be on hold until that does happen. IONQ or these quantum stocks, I don't know who's buying this, to be completely honest. Maybe there is some major story, or maybe it's just a bunch of traders trading a $20 billion company that is generating hundreds of thousands of dollars in revenue. I think a lot of people in the audience probably make more money than IONQ, but we'll see what happens later on. Who knows? Maybe IONQ is the next big frontier when it comes to quantum computing, or maybe it's IBM and Google. Who knows? We will continue to see that one, but that is definitely very high beta. So be careful if you are investing or trading that one. But really, for the most part, HIMS is red. It's just something you see every day. We all got to keep getting used to it. Webull actually is actually, I didn't take a look at this chart. Software stocks are doing pretty decent right now. DigitalOcean is almost back at $50, which is good to see. Rubrik was it was at $80 this morning, but it pulled back. Rubrik is an interesting one because this had a really good earnings lately. And I would even argue that the company is actually still doing really good. The thing is that it is retraced most of its entire earnings move and is down about 20% as of December 19 after reporting the good earnings. It was trading at above 90 bucks and then it pulled all the way back with the market, has not really recovered since then. Is this a great buy right now? And this is not financial advice, but I've been looking at some charts here, right? So if you look at the exponential moving averages and the moving averages, let's actually just look at the simple moving averages over here. So let me close the drawings out. All right, so we are trading here just short of the 200-day moving average. And I did add up here just a little bit, unfortunately, but my cost basis is down to the 30 bucks. I mean, this is a really good company. It of course is not a profitable company, but they are heading toward free cash flow profitability, and they will eventually be a profitable company probably the next couple of years. So it does take a little bit of patience here, but from a technical perspective, we need to see this close above the 100-day and the 200-day moving averages, get very bullish over here. If we do look at the exponential moving averages, it is trading above the 9 and the 21 and the 50. So this chart is set up for a pretty bullish move to the upside, or at least staying in a bullish trend as far as the exponential moving averages. But let's take a look here at more of the longer term time frames, right? So over here in the longer term time frame, the stock has only been IPO'd for about a year and a half now. So it is not, you don't have that much to go off of over here. But if you look at the weekly moving averages, it's trading above the 50-day and just shy of the 20-day. The monthly moving averages, we really don't have anything. We only have the monthly 20-day monthly 20 moving average, and it's trading above it, which is good to see. So I do remain bullish. Rubric, I think this is about 6% of my portfolio. Cost basis is pretty low, so I do have that for me. But I'm bullish just as far as the long-term fundamentals for this one goes. Did I see gold? I mean, how could I not see gold? I didn't bring it up, but I should actually bring it up right now. So let me go ahead and take a look at gold right here. Commodities. Yeah, gold has been, it's almost at 4,500 bucks. I mean, this chart is wild. What is gold telling us? What is gold and silver telling us? Well, I think a lot of it's momentum, but I also think a lot of it is that the market understands that the long-term inflation is probably going to be around 2 to 3%, not sub 2 to 3%, which is what we've seen for quite some time before this decade. But it is definitely, it's going to stick around for a long time. I think that's what the bidding of gold is. Also, what you got to remember with gold is that big institutions don't usually trade gold. They usually buy and hold gold. Now, if you look at crypto is just not looking good right now. Like, this thing is just, it cannot stay above 90K. And that is not a good look to see, especially when you're trading below the 20-day moving averages and all the moving averages. You're trading below all the exponential moving averages. This is just not a good look to see. Every single time Ethereum gets above 3,000, every single time crypto gets above 90,000, it just gets sold off ridiculously. I don't know why. I don't know why this thing cannot stay above those values, but yeah, that's just the case. So we're going to close that one off there. I did talk about space stocks for a minute. I mean, really, the space stocks really comes back from like the how do I stop sharing my screen? The space stock momentum is really coming back to not only the governmental backing of a lot of these space companies, but also the momentum and SpaceX possibly coming to a $1.5 trillion IPO, which they do plan on going IPO in 2026. But right now, these space stocks is the only way you can publicly invest as a retail and trader in some of these companies. And if the momentum's there, if the fundamentals are there, and if the theme is there, the stocks are going to rally. We saw the same thing happen with the data center stocks a couple months ago. We're seeing the same thing happen with space stocks. Now, we also have the same type of exposure with drone stocks as well. ONDS or ONDUS has been on a crazy rampage rally recently. Yeah, ONDUS actually is up about only 49 basis points, but DPro or Dragonfly is another operational portion of the drone stocks. That one is up a considerable amount. I know I'm not sharing my screen. I'm just looking at it right now. I have a swing position in DPro. The chart looks pretty good. Also got a stock tip from Stock Talk, quote to him. And I'm sorry, kudos to him. That one is not my trade. I just joined in on that one. But there's a few companies out there, and I'll tell you exactly what I'm positioned in right now. But nothing much has really changed in my portfolio in the last few weeks. I've just been adding and not really have that much trading position until we broke back above the 20 and the 50-day moving average in the Qs and the SPY. So we got some news this morning that, hold on, let me just share this screen here. Yeah, we got news this morning that NVIDIA is going to be shipping off some chips to China. And it's actually just an article that I have here for now. So NVIDIA aims to begin H200 chip shipments to China by mid-February. And one thing we got to remember is that NVIDIA, in their most recent earnings and in their guidance, they do not have China. Great. Thank you for ads. Thank you for the ads. They do not have China revenue included in its guidance or even in its financials right now. So that's possibly a $20 billion market that they can add on to their annual revenue. And I believe their annual run rate for the revenue is somewhere upwards of the $200-300 billion range, which is the reason why the stock is trading around $5 trillion. But they told people that the U.S. chip maker plans to fulfill initial orders from existing stock, with shipments expected to be 5,000 to 10,000 chip models, equivalent to 40,000 to 80,000 H200 AI chips in the first and second second sources. So this is inventory they already have, so they don't exactly have to build these chips in order to ship them out. This is from their existing inventory. So we've seen that inventory pile up in NVIDIA's most recent earnings. They obviously want to offload that inventory because it's just sitting there depreciating. But also on top of that, that's basically free revenue that's already been accounted for as far as costs. So if they are able to ship all of this inventory out to China, that's very bullish for NVIDIA, because then that just shows, and again, this is the reason why the stock is rallying, that just shows that they have a lot of interview that was not accounted for piling up for next quarter. And they already guided for about 62-63% of growth next quarter in terms of their data center. This will push it up further. And this is very bullish for NVIDIA. NVIDIA is actually trading at a very attractive valuation for the long term here. I think it's trading at a less PE than Costco and Walmart, which just makes no sense to me. But the market does what the market does. NVIDIA is at an attractive cost right now. Also, we got news that I'm going to open up my Twitter here because I posted about it this morning. No, that is not the one. It is the AMD one with Alibaba. Yeah, that's right. Right. I'm waiting for my re-entry of Palantir, and I've been waiting for a while. So I dropped the ball on that one, but it's all good. It's all good. So over here, we saw that Alibaba is reportedly considering an order of 40 to 50,000 AMD MI308 chips. And this also comes along with the news that you've seen lately with the NVIDIA shipping H200 chips to China. This is very bullish for these companies where the price has been very suppressed in these stocks, right? This is the reason why you're seeing a lot of the bounce back. It's very fundamental driven and news driven, right? So the question is this a dead cat bounce, or are we heading to all-time highs? Today, we're not that far away from all-time highs. In fact, let me pull up the trading view here real quick with you guys. I'm just going to share this entire screen here. Let's see how far away we are from all-time. We're so close to all-time highs. We made an all-time high recently, and then where does that put us today? It literally puts us like, yeah, we're like 30 basis points away from an all-time high. One thing that I want to see here, I want to see a higher high on this chart, right? So usually you want the charts to have higher lows and higher highs on their pivots, right? So over here, we saw like a short-term downtrend that basically bottomed the end of November. We tested the 100-day moving average on S&P 500. We bounced up, made a lower high from here, but then we bounced from a higher low. So my suspicion, especially since we're trading above the moving averages in the S&P 500, is that we're going to make a higher high. All right. So my target, I don't know if it's going to happen for the New Year's, but my target is that we're going to hit around 6,900, or at least more than the previous all-time high before the end of the year. And if that does happen, guys, you need Amazon to rally, you need Meta to rally, you need Apple to rally, you need Google you need these mega caps that are basically the main momentum of these stocks in order to make that all-time high. However, I don't think, in order for the market to stay bullish, or in order for people to be making money in the market, because I know a lot of you guys who are following me, a lot of you guys who are watching this right now, you're not like 100% invested in these mega caps. You're invested in the more the mid caps and smaller caps. And I would even say some of them large caps and mega caps as well, because Palantir is a mega cap. But a lot of these stocks can rally without having all-time highs in the S&P 500. All right. So if you take other companies like Robinhood, it's trading near, well, not near its highs, but it's trading pretty up there. You have On Semiconductor, which is a stock that I've been bullish on since the low 50s. And I think it's of still really good value. The chart looks amazing. Look how much it bounced since its lows. You have stocks like this basically hitting near, I wouldn't say 52-week highs, but hitting near recent highs. You have Zeta almost back to 12, not almost back $20. That's still, but that's something that I'm invested in right now. You have Adobe pushing near the recent highs. You have certain stocks that are still pushing up there that aren't exactly making new all-time highs today, but finding a lot of momentum and still are of really good value. And then you have the laggards, which unfortunately is the ones that are going to bring the market back up, and that's the mega caps. So I do think that in order to see new all-time highs, you need these mega caps to go back up there. But I don't think you need to be in the mega caps to make a lot of money in 2026. In my opinion, for 2026, I think the mega caps, out of all the mega caps, I think the best value you're going to get right now is Amazon, or the best value I'm going to get right now is Amazon and Meta. It was Google, but Google is no longer up there. I'm not saying that Google won't go up. I'm just saying that if you think in terms of price to forward free cash flow, operating cash flow, Amazon and Meta are trading at 14 and Google is much higher up there. The way that these mega caps work is that you get like a bit of rotation in terms of what's going to rally and what's going to go up a lot, right? You had Tesla basically pick up the momentum, pick up the slack from NVIDIA lately, pick up the slack from Google lately, and it's Tesla right now. And then I think the next ones are going to be Amazon and Meta. So what is that going? When is that going to happen? I don't know. Who knows? June, you asked me, what about Marvell? So Marvell Technology is going to move, I don't want to say close in tandem with Broadcom, because Broadcom has been very weak since its last earnings, but it is trading here above the 100-day moving average. For Marvell Technology, this is like a quote-unquote baby Broadcom, that chip stock investor that Nick and his wife talk about a lot. In fact, I would actually say that if I were to pick between Broadcom and Marvell, Marvell sets up for a really nice trade. But Broadcom, I would say, is probably the least riskiest when it comes to the ASIC sector. Application specific integration circuit. That's what it stands for. Basically, your niche GPUs, right? They're still GPUs, but they are specifically catered toward certain responsibilities and certain processes, which is your Google GPUs, which Broadcom does design for or does build for Google, right? So Marvell does do it for the, we don't know if they do it for the Trainium 4th generation or the Infraretro 4th generation for AWS. They do it still for Microsoft. Microsoft is looking to get a waiver from them. They do it for Meta. You know, like they're kind of losing a little bit of market share, and it's mostly because these other companies, the other mega caps, are probably looking toward Broadcom to basically steal the cake from them. But we don't know for sure what's going to happen with that. But if we do want to see Marvell come back, we need to see the ASIC market come back as well, and that includes Broadcom. Even though the whole drop at Broadcom had nothing to do with its fundamentals, what it had mostly to do was OpenAI. OpenAI is like a cancer for a lot of these mega cap companies right now. The negative catalyst from OpenAI is just, it's not, the market does not like OpenAI right now. Even the mega caps don't want to have anything to do with OpenAI. I think that story will turn around. Maybe what we saw recently over the weekend with the compute margins for an OpenAI, basically saying that we're making a lot of money off of our sales and focusing on enterprise, which is basically turning over a much higher profitability standpoint from them, and that's debatable to say what compute margins are. I think that is going to kind of inflect. Right now, everyone doesn't like OpenAI, and guess what? A year from now, we might be seeing a different tune. And I think if that happens, Oracle's going to catch a bid, Broadcom's going to catch a bid. Basically, any of these companies that are focused on OpenAI is going to catch a bid, including the data center stocks. So, but that's going to take time. That's really going to take time to happen. So hopefully, Sam, teach me how to make 1 million off 1K. Well, you know what? I would teach you if I could teach myself how to make 1 million off 1K. I have yet to make a 100,000x. No, sorry, that's a 1,000x from $1,000. I wish I could do it. But you know, it takes a lot more than $1,000 to be able to make $1 million for me at this point. So yeah, let's see that. Merry Christmas, everyone. All right, so let's go on to the final topic here, because we are coming to the top of the hour and I'm not going to be doing the market close. We have our final topic here about Google acquiring the company Intersect. We'll go over this one real quick. We do have a CNBC video that I want to play for you guys. And hold on, that's not sharing sound. 1 sec. Here we go.
Hey, good morning. Own supply and as a
Hold up, guys. My bad. It's only a 1 minute clip, so I'm gonna play it again. That's why when I switch over to that one, it stops. 1 sec, guys.
Some breaking news on Alphabet. Deirdre Bosa has that story for us. Hi, Dee.
Hey, good morning, Mike. So Alphabet is acquiring Intersect for $4.75 billion in cash and debt. And this is a move aimed at locking down power and data center capacity, of course, as
Dude, I don't even know what is happening here. Anyways, what they are basically saying is that, What they're basically saying is that you have Alphabet acquiring a company called Intersect, which focuses more on the energy and infrastructure for data centers, which in my opinion is part of the reason why you see a lot of the energy plays coming back, but less of the energy plays in the market that are focused on speculative revenue they're going to be getting, but more focused on revenue they're actually getting today. That includes LEU or Centrus Energy. I believe that also includes CEG as well. And while these stocks may not be up tremendously, keep in mind that these stocks have already had a basically high run lately. These are the companies that are making money off of energy and infrastructure. So you have that. You also have CCJ, which is up pretty considerably, almost at $100. You also have Energy Transfer. This is something that Steve, actually, no, Energy Transfer is not even up that much, but this is something that Steve is very bullish on. Finally, BN or Brookfield. This company has a lot to do with energy as well, but anyways, to close that one out, guys, just wanted to let you guys know that Amit is doing a gathering, I believe, in New Jersey on February 1st, and I'll be attending that one. So if anyone is going to be there, I will see you there on February 1st. So go ahead and check his page out. Actually, I'll try to find that link real quick. But yeah, I will be there. I didn't really get too much into things that I have in my portfolio, but really my biggest plays coming into 2026. Oh, yeah, that's right. T1 Energy. I don't even know what that ticker is, but I keep on seeing that one. Bloom Energy as well. Hold on. Where is T1 TE sticker? Holy cow. T1 Energy is up a lot. What about Bloom Energy? That one got hit a lot. Bloom Energy's okay. Bloom Energy, I need to look into the fundamentals of this one. This was like a massive winner for a long time. This actually looks like a decent stock to buy, but I need to do a bit more research on that one. Maybe I'll report to you guys on that one. But anyways, as far as I'm gonna get a little bit more into it on the next streams, but I really do think that the stocks that I'm positioned for obviously are the ones that I think are going to go up the most. But on semiconductor, ENS or Enersys, I believe is going to do really good in 2026. Zeta, Adobe, Path or UiPath, I think is going to be really good. Amcor, of course. Lemonade, I think Lemonade is going to continue to do really good in 2026. I think that it's actually pretty early in that story, but if I had to pick one, if I had to pick one out of all of these, I'm going to go with On Semiconductor. I still think On Semiconductor is of really good value. But anyways, guys, really appreciate you turning in. Apologies for the short one. I did mean to start streaming at 2:45 p.m. my time, but I don't know, the app wasn't really working. I used Restream, it wasn't really working correctly, but I did get it to work because I called IT, basically called myself up and I opened up an Internet Explorer. So guys, take care. We're going to be doing another stream tomorrow and another stream on Wednesday. Thursday, we're going to be off. All of you guys are going to be off for Christmas or the holidays if you do not celebrate Christmas. Or if you don't celebrate any holidays, you guys are going to be off anyway. But Friday is another trading day, so I'll be online on Friday. And then what do we have left for the year? So we have 29th, which is Monday. The 30th, I believe we have 30th is a full trading day. 31st is a half day. So I'll be in Monday, Wednesday, and Friday. Monday, Tuesday, and Wednesday next week. Thursday, I will not be streaming. We have that day off. Friday, I will be streaming. It's probably going to be a short one. And then I will report to you from Florida in January 5th. So anyway, guys, take care. Thank you very much for tuning in. And again, if you are on the Twitter channel, go ahead and subscribe and like the video on YouTube on Wolf_Financial on YouTube.